What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online as usual. Today I'm on Saul's Lot again, or Solomon's Lot, depending on if you're looking at the domain name or the name that's up there. Um, I purchased my first, I don't know exactly, I guess it's an NFT on here, but my first piece of a deck um, today. It was quite a process for me. I'm not a crypto native person, so it took me a little while. I'm going to show you how I went about doing that, just in case you're a real estate guy like me and not a crypto guy. I think it's probably like all the steps were probably simple and straightforward for someone who is, I only had crypto on Coinbase and on Lofty, and didn't have any other wallets besides those, so I had to get a Gobi wallet. So I'm going to go through the steps that I had to do that, just to hopefully save somebody else some time to get there. But first, I want to talk a little bit about, a little more about what the site is, why I decided to invest on here, because it's very new. He's really, just getting past his proof of concept phase. If you didn't see the other video I did, Matt, one of the co-founders of this site, was nice enough to spend some time with me on my channel. I got to ask him a whole bunch of questions, figure some stuff out. There's still a whole bunch that I don't know about it, and they're obviously too they're working out a lot of stuff. I think they have, the technical aspects of the contract and stuff worked out. And as far as like actually trading, I think they have that too. But it's the website itself and how user friendly it is and whatnot. They're clearly working on daily, and I'll show you a couple of things where I noticed that. But so in general, what is this site doing? It's you're buying a piece of you're buying a piece of the, I'm going to say it not technically correct, but what it sort of feels like is you're buying a piece of the homeowner's equity. So this is somebody that owns a home. In most cases, especially the ones that are on there right now, they plan to sell it in the near future. They need some money now, and you are buying a piece of their equity, but you're buying it at a discount to today's value. And so they determine what today's value is by doing an appraisal. Um, when you buy it, they tell you on the website. What did I do? Am I on the wrong page? Oh, there we go. They tell you where, what the actual discount is that you're buying it at. This particular one is 13. I'm going to do some math for you. So you might be wondering, if you've been watching many of my videos, I'm very risk averse. I spend a lot of time doing due diligence on properties, even if I'm just buying little pieces of them. Um, and so why am I, investing in something that's such, one, it's a new platform, and it's a concept that is not the standard, investing in real estate, right? And I think that, the short answer is I think it's going to turn out to have fantastic risk adjusted returns. Now, it might not right now because there's a lot of things that could go wrong with the company, with the, like as far as there's the platform risk, right? They have to like actually get it up and running. They have to be able to sell it to the homeowners as far as, attract enough customers to do it. They have to, um, attract enough investors like us to put money on here. There's a whole lot of reasons that this site could potentially not be here a year from now. I'm not saying that's what I think is going to happen, but it's an additional risk on top of everything else. And like I've mentioned before, all the sites have platform risk, but then you also just have a business model risk here where they're trying to do something that just doesn't really exist out there in the marketplace. And so it's going to be an education process, both for the homeowners who are selling a piece of their equity and for us as investors who are buying a piece. And so I think I got off track explaining. So what we're doing is we're buying a piece of that equity at a discount today. When they sell the property, Or sometimes they might refinance or buy you out in some other way. But I think the standard model is going to be when they sell the property, you get, depending on how far in the future it is, there may be a new appraisal that's done, but you'll get, your piece of the appraised value, that's not discounted by the 13% that's discounted here. And so, I think the math of that looks really good. But so there's a couple of things from a risk, thinking about the risk of it, what could go wrong, right? Well, you could, if it's really just based on appraised value, unless there's a big move in, the appraised value between the time that you buy it and when you sell it, there's not a whole lot of risk there pricing wise. And so, um, I think when I talked about this before, I was worried about, okay, you buy a piece of the equity, you think it's at a discount, but then the home sells for less than that, and you actually lose money on that sale. There's a potential that that could happen, but it's not as great as I thought it was. So, for example, on this one, it appraised at 330,000. Um, the amount of equity being sold is $40,260. Uh, that amount is then discounted, by this 13%. And so, they're really getting about $35,000. Okay, you have, you know, $40,000 here, and then this home also has a loan on it, and it has a loan of $154,000. So, in order for you to actually lose money on a sale, it would have to sell for an amount that is, the current mortgage value plus, small, that's lower than the current mortgage value, um, plus whatever amount they sold in equity plus closing costs, right? And so if you look at on this one, we'd be talking about having to sell around $100,000 below your appraised value before you'd even be worried about that. And the way, and I think this one has a very low leverage, ratio, but I think most of, they have the first mortgage plus whatever the amount they're selling in equity together they have a limit of, I think he said 80% LTV when I talked to him. But it's something that on every single one of these, we'll be able to look at that ahead of time and figure out, how much risk is really there. So that understanding that piece, made me a lot more comfortable with this. Um, so there's a lot of certainty in the amount, in getting paid back the right amount, provided the property they're able to sell. If they, refuse to sell, the, Sol's Law has uh, a mechanism to where they can force that sale. I'm not going to get into the technicalities of it, but it's similar to how, a mortgage would, a mortgage lender would do it. And so I actually like that a lot. And then and I'm going to do some math in a little while, to show you those returns. But first, I wanted to show you a little bit about, the stuff that we can do as far as due diligence. They provide these, property explorers, and for every property. And right now, there's only a couple of properties, but so you can get a good idea about, um, so I think the real risk in these deals is not necessarily, obviously there's always a chance to that you could lose money, but the thing that I'd be wanting to compare one to the next is how fast do I think that property is going to sell, right? Because it's going to make a big difference in my returns, whether it sells in a month or 8 months, right? And so that's one of the things that I would be doing when I'm comparing these is looking at, all the data they provide, also looking at third party data. For this one, it looks like it was actually a flip. This is the most recent picture on, what is this, Redfin that I'm on. Um, but it looks significantly different here. All new windows, new roof, it's painted. The inside looks renovated. They still have. So this is, something. Oftentimes, when you have a flip, it screws up some of these, third party websites because, oh, this just sold, in June of last year for 136,000. Um, this site can't quite get you to that 330. Um, most of them can't. But again, even if it sells at 277, as long as that appraised value at 330 hasn't changed, um, because they'll do a reappraisal every year. But the contract on this one is only 8 months, so I believe they won't even do an appraisal. I don't think they're going to look at the appraisal for the sale, but hopefully, I can get an answer on that. That's one of the things. Before I put a lot of money on here, I'm going to want to understand. I just wanted to go through the process to buy one, though, so I could show you how it works. And I do think it looks like there's a good chance I'm going to make some money on this. The other thing, they give you an appraisal so you can see where that appraised value was. Um, and then this is the sheet that I think is kind of interesting. It is, this is the whole contract actually. But when you get to this page, the contract that's creating your interest. But when you get to this page, there's a lot of info that's important. So the effective date, this started on 12/30. I bought a piece today, and so the math was actually after midnight, so I actually bought it yesterday. But so the math that I'm going to do in a little bit is going to be, I'm going to look at it if you had bought it when it was first listed and also today. But there's an expiration date of 8/30, right? And so it should be paid off prior to then. It's expected to be. Now, if it's not, that's when you run into the issue of you might have to have a go through a foreclosure to be able to sell it and then get your interest. So that's the real risk, right? Like that timing risk is what I think is going to be, really key. And the thing that I'm going to really want to analyze and look at properties and make sure that I believe that it will sell in that time frame, or they'll be able to refinance if that's something that they're going to do instead. Um, they give you the starting home value, the amount that's actually paid to the homeowner, what the percentage is, and so that's based on what percentage of the property is being sold. Then there's an origination fee. We'll look at that, and then this annualized cost limit. This is one I hadn't picked up before, and so when I am doing math on these deals, I understand why maybe this is coming into play, and so I'll talk about that in a minute. So I want to show you, if you're on the site and you're thinking about buying some, the first thing you do is you're going to connect your wallet. If you don't have a Gobi wallet, when you first click on this button, it will pop up with a video, a YouTube video explaining how to get a Gobi wallet, and that was actually pretty simple. It took me a few minutes to do, but wasn't a big deal. I had to then get some funds in my Gobi wallet, and that took me a little bit longer. I had money in Coinbase. I took the money, and there is, and I think that there's a way to um, move it on the site, but didn't seem to be working. But so I actually used this other site that Matt, the co-founder of this of Sol's Lot, had mentioned, and so I just brought this up. You can see it's just warp.green/bridge. This made it really easy to connect both my Coinbase wallet and then the new Gobi wallet that I had made, and then moved some money onto the platform, or into it. Really just moved it into my wallet, and so then I had to go back out, click the button again, and it connects the wallet to the site. And so one of the things that I didn't notice or I didn't understand when I was trying to get the wallet, it's really just a Chrome extension. And so that threw me off the first time I went to do it. Now, when you see the little video, they make it really clear. I thought I was just doing something wrong because I am not a tech guy whatsoever. I'm not a crypto guy. All of this stuff is the stuff that's doesn't make a ton of sense to me. Um, but I figured it out, and so if I did, I'm sure most of you that are watching are going to be able to as well. I'm really just here to share the real estate info, but because it's a brand new site and I figured I'd show you how it works so far. It does seem like they're still currently in a going to be constantly changing it, making it a little bit simpler. Um, I moved this USDC is what I actually put on there, and I moved extra because I didn't know as far as fees or whatever. But so I ended up having a little bit left over, and this is what I bought, right? And so it's super simple. So once you connect your wallet, you go back out and oh, if you go to the property and you would just click on buy, and then this little thing comes up. This threw me off at first because I had moved this USDC into my wallet, not the actual Chia. And so I was like, oh, well, all these are Chia. Well, if you just click this button, get rid of those, then you'll see all the ones that are just in USDC. Um, you can actually, if you have Chia or you're somebody who already knows how to do it, you can use some other sites to convert to, what you've got in there and to get it, and then you can use those offers. But then as soon as you have this one, oh, you just click on it. You'll just click pay with your crypto, continue. You acknowledge and agree. And I don't have enough on here. I'm not going to go through and actually do another one. But then you get this little thing, and if you sign it, you'll go ahead and do that. And I'm going to cancel it because I don't, like I said, I only put enough to buy one. Really just experimenting with this at the moment. Even more so, I think, than some of the other sites, because, like I said, I mean, it is really early. Um, I think it's going to be worth it. I want to support the platform because I think that if he's able to really take off with it, it's going to be amazing. And I want to show you why. Oh, let me go back. Oh, did I disconnect? Now you're going to see something. I'm going to move this over here because I don't know if you're supposed to see this or. Yeah, that covered it up. Good. So there's a little number over there. I have no idea if that's private or not. Okay, so now I'm actually connected. And then when you click on connected wallet, that's what brings you here. Just moving me all over today. Hopefully that's not too jarring. Um, this is where your asset overview is. You can go back to the marketplace from here. I probably should have done that. And then one of the things that I thought was interesting is he talks about taxes on this. Um, and obviously I'm not here at all to give any tax advice. But one of the things that I talked about early on in my channel is trying to avoid making money in states where I have to file state income tax returns. So it made me look up, is Tennessee one of those states? At least this taxfoundation.org says that it's not, so that made me feel pretty good about it. But at the end of the year, I'll hand everything over to my accountant, and he'll tell me if I screwed up and I actually have to file a return there too. At the moment, I don't know. All of these sites I haven't bothered to talk to him up front because I'm just not putting that much money in at the moment. It's whether or not I end up having to do some extra state returns or something. It's not the end of the world, and it's really kind of worth it to me at the moment to be able to have a lot of different markets and sites and everything to look at. Um, if at some point it becomes too cumbersome, I'll scale back and try to just do ones. Maybe limit the number of markets that I'm buying in or something like that. One of the good things is that states without income tax and states that I actually want to invest in have a somewhat strong overlap. It's not exact, it's not perfect, but maybe if I had to do it, I might add a couple of states and do a couple of state returns. Not the end of the world. That is more than I actually wanted to talk about taxes. What I really want to just get into though is just the math of this, right? So I'm using this. This calculation is just an XIRR, right? So it is just looking at cash flows over time. This is what I actually spent today when I bought the my NFT or my piece of the deck. Actually just not sure. I'm just going to call it my fraction. So I bought my fraction today because I think that we are going to have a generic term overall. I know we've got tokens on some sites and some sites it's shares, but in any case, they're all fractional ownership. So I've got my fraction here. This is the day that I purchased it. I'm looking at, okay, well, what if they hold it all the way and they sell it the last day that they're allowed to in the contract? And then the 396 is the value without the 13% discount. One of the things that I'm not sure about is if there's some additional fees when it liquidates. I didn't notice whether there are or not, so that would skew this. But I actually went back and calculated numbers doing it at 390 or a little bit less, and it's still all pretty good returns, and it's all based on it being quick, right? So like if they hold it all the way to the end, I'm still looking at an 18% annualized return. If they pay off pretty early, this is halfway through their period, so at the end of April, you end up getting a 40% return. If something crazy happens, they get it under contract this month and sell it next month and you get paid off. The math says it's 124% return. this is one of the questions that I'm going to have for them, because this says the annualized cost limit is 100%. So it seems to me like that's actually not going to be possible. And so maybe in that instance, I'm not sure what happens. Um, but anyway, I mean that's a really early payoff, and I don't think this sort of return is going to happen very much. Maybe not even the 43. But it doesn't take a whole lot. You can see every month that's early, it's going to be a significant move in your annualized returns. And so, um, you think, oh well, I'm really just making a 13 or 15% return or whatever it is. But that's why I really would like to see if this site gets to a point where they're moving properties at scale, and you can continually, okay, the day that you get paid off from one, go and buy your next one, and you can really roll your money over into these higher returns. That's, I think, pretty amazing. And then the last one that I did is if they held it from the whole term, meaning they purchased it the day, someone purchased it on 12/30, which was the date in that contract. And even then, it looks like 17.71, um, which made me think that there must be some additional fees, because they mentioned a 15% return on this. So what would that be? Like maybe 388? I don't know, 390. Yeah, so maybe there are some additional fees, right? And if that's the case, 390. Like I said, I don't know. I'm gonna have to ask about that. But even then, you can see with earlier payoffs, you can start to get some really incredible returns. Um, there's no guarantee that's going to happen, but sometimes, if you're buying a whole bunch of these, and again, we're going to get back into, this would be a platform where, again, I wouldn't be trying to pick winners. I might try to rule out some that I think are losers, ones that for one reason or another, maybe I could use my judgment and think, I think that one's really just going to take a long time to sell, and maybe will be a problem. But this would be one where I'd want to be able to just buy a lot of little pieces of them, and then on average, some of them are going to pay off early. And over time, we'll figure out how early that is. And, I would expect to get pretty great returns if that's the case. Now, part of the reason that I think that they're offering, such good returns at the moment is because it's a new concept. And at some point in the future, you're trying to invest or attract investors. So at some point in the future, those might end up getting bid down. But one of the things that you can see is, I was looking at, well, how early it was paid off. But the other thing is, depending on how quickly it sells out, if I bought it here versus bought it the first day, you can see already I'm getting a little bit better return just for having waited 10 days. Um, I think that they're probably thinking about ways to incentivize people to buy earlier. So maybe there'll be something they do about that, because they don't want everybody to wait till the last minute. And honestly, I'm not sure if there's a deadline as far as how quickly it can sell out or not. Um, but so okay, that's why I think this is really great. But okay, why is anybody doing this, right? Like if you're the homeowner, um, like yeah, there's only a couple of properties on here so far, so it's the reason I'm jumping in now is because I kind of believe that there'll be after talking to Matt the other day, I really believe in his vision. I think he seems like he's a smart guy and is going to be able to execute. But he did a good job of convincing me. I don't have to be convinced of the returns because I can do the math myself, right? And I'm like, okay, this is fantastic if I can do this. But he did a good job of explaining why the homeowner would be willing to sell their equity at such a big discount, even to have money for the short term. And this is kind of the math on this one, right? So like this is the property appraised at 330,000. Let's say that homeowner needs some money right now, right? They need, and I think that's probably not the case with that specific property. I think I'm actually not sure how he's sourcing some of these right now, because that one was a flip, and I don't necessarily think flippers are going to be the main people putting something on here. But let's say it's a homeowner. They want to move out of the home. They want a little bit of money to clean it up, maybe fix just a few things, so that they can get a maximum, their best sale price. Well, if you don't do that, right, trying to sell a home that needs, a lot of realtors use that TLC phrase, needs a little TLC. Well, there's a good chance you're going to sell at a decent discount. Let's say, in this example, let's say it's a 10% discount. Sometimes it might be bigger, sometimes it might be less. But let's say, okay, they sell the property, they have to take a 10% discount because they don't have the cash today. They don't have any reasonable way, maybe they're not qualified to borrow the money. Well, just a 10% discount ends up costing them $33,000 on that sale, right? Because they're having to discount the entire price of the property. Um, that's pretty expensive. So if we look at Saul's lot solution, it's a lot more nuanced, right? So we have the appraised value, we have that portion of the equity, okay, 40,000. And so now they're selling that equity, but that's all they're selling. They're not selling the whole home at a discount. They're selling just the equity at a discount. So even though on this one it's a higher discount, it's 13% higher than the 10 that we were talking about having to sell the whole property at. Um, the cost of the discount itself is a little over $5,000. And then there's also an origination fee in the paperwork. So I added that in. So the total cost of the homeowner for this money here is, less than $7,000. And that gives them access to $35,000 upfront that they can move out of the property, maybe fix up or clean up or do whatever types of things they need to, maybe stage the home, a lot of things that will, and also maybe just give them the money to be able to move out because they have to move today and they don't have to sell it quickly, right? And so it gives them a little bit of timing. And so by giving up, say, $7,000 today, they could be saving this 33,000, right? Like, I mean, if you have to sell today, you're often selling at a bigger discount than if you're willing to hold out for 3, 4, 5, 6 months. And but if you're in a situation that the only way that you can do that is if somebody else gives you money today, this is a really good solution for that, and it's something that, you know, I think it'll take a little while to really educate homeowners on it because it's not a loan. They're going to think it's a loan at first. It's not an interest rate. They're going to think they're just paying a high interest rate. It is a high cost of capital, but when you compare it to, um, what it would cost you to sell at a discount, in this scenario, right, it's a $26,000 savings. Well, if you were doing a 5%, I mean, you're still saving, almost $10,000 by doing it. And I guarantee if you're in a home, um it's not, there's all these little touch ups you haven't done. Your home's cluttered because you haven't moved out, and a lot of people, the way they live, if somebody walked into my house the way I live, nobody's going to buy it looking how it is, or at least not at full price. So to imagine that you're giving up 5% is really easy. I think 10% is pretty realistic, depending on timing. And so in this scenario, I kind of see the need that it's filling in the marketplace for somebody. So I don't know. So because of that, I just figured I'm going to jump in here early. I'm interested in seeing how it goes. I would expect that a lot of the early deals will be really good deals because, the platform has to attract both investors and, um, the homeowners. And I think at the moment, there's probably a lot more homeowners out there with that cash need than there are investors that want to jump in something that is, such a niche type of, product. I think just the education piece, right? Like just understanding what you're actually buying. Um, I can imagine that being hard and them having to, pay out some pretty good returns early on. So, like I said, I bought one today. Um, I don't think I'll probably end up buying, each time a new one comes to the site. Maybe I'll just buy one as long as I look at it and I feel like, yeah, it's reasonable that it's going to sell. But I'll probably wait to put any real money on here until, I've got at least a couple of sales, and so that will take a while, right? Because I mean, The one I bought today, it could go all the way through the end of August. Um, it might not, right? It might, if it sells sooner, one, it'll make a better return, but also it'll give me some confidence to put some more money on earlier. Um, that's really all I wanted to say about that. I think it's I don't know. I think it's a really intriguing um, idea. Um, I don't know how much I'll end up really talking about it because the due diligence for this is much different from the due diligence on an investment property. I'm not sure that I'm going to add a lot of value by analyzing each one that pops up like I'm doing on Lofty and Mogul. Those ones we're looking for properties that we're going to hold long term, and I think, or whatever we're doing with them. And so I think that it's much more useful for us to actually go through and do due diligence together. I think this platform I'll end up treating a lot more like ground floor, where I'm buying one, a little piece of every single one. Um, but I don't know, like I said, it's still really early. Um, I barely was able to get my money on because I'm just not good at the crypto side of things. But one of the things that's pretty cool is when you reach out to one of these, reach out to Matt through they have all over the site. It's like, hey, reach out to us, click, and they're definitely. I mean, he was super helpful when I had problems, walking me through that and actually he's the one who mentioned this other site because his site wasn't working for me to be able to move, convert it. um, I don't know if so. One, two. I really want to see more of these platforms succeed, and especially ones that have like maybe a little bit different. Like this is uh, filling a need that I think is really exists in the market that that we don't see. Oh, look at that! I was trying to find where my there's my asset overview. It fills a need that we that I think exists, right? Like that there's a lot of those people that could use that cash, and at the moment, um, many of them are just selling at a discount, and I think that's like where the wholesaler business kind of comes from. For is which oftentimes it's helping somebody, but it's that person would be much better off with this solution than selling it their whole home at a discount. So I think that's going to be interesting, but I just want to see this fractional real estate, uh you know the whole ecosystem really flourish. And I think the more different ways that we can invest in real estate, the better, right? Like, I mean, I talk a lot about diversifying. This is a nice diversification of business model, right? Like, so okay, now we're diversifying across different platforms. We're looking at different property types, different geographic markets, um, different strategies, right? Like as far as more of the token flipping versus long-term holds. And now we've got this, which is actually just taking a piece of the equity, um, really just a piece of the appreciation, right? There's no cash flow that's tied to this. It's all about the appreciation piece, or the value of the equity. We've got investments in debt and other platforms. And so I think the more different ways that we can attack it and get some real estate exposure, um, the happier I'll be. So if you're somebody who's building something like this and I haven't found it yet, please reach out to me because I'd love to hear about it and give it a try. If you're somebody who's already investing on this site, I'd love to hear. I know they've had at least one or two pay off already. I'd like to see what that looked like for you. Um, yeah, or any of the other platforms I always talk about. There are links in the description below. Just like I had mentioned for, or always mentioned for the sites that I invest in, there is not some sort of, he doesn't provide a link in my wallet or anything like the other sites do. Um, so, it's just solslaw.com if you want to go to that. Also, if you haven't already, please like and subscribe. I always forget to ask until the end. It would be awesome if you do that. Really trying to grow the channel. Um, I don't have a real specific goal for it, but I think I've already get to meet a ton of you guys, for having I've just passed up 300 subscribers, which is exciting, but have already made some actual friends from here. People that I talk to, somewhat regularly now, which is cool, and that are trying to do the same things that I'm doing, right? And the more that we can share knowledge, and um, I one of the things I've always looked at real estate investing, it's not a zero sum game. It's not as if me being on this site means that you're going to get less deals. To a certain extent it is, like, on Lofty especially, like, well, even on here there's limited supply, but it doesn't affect the pricing. But like on Lofty, when a cheap token comes up, sometimes somebody I know gets it before I do. And that's always like, oh, they're making the money and I'm not. But in general, having more of us on these platforms talking about strategy, making, figuring out um, different, on that platform, though, it really is helpful to have other smart investors own the properties with you, because you make decisions together. You have to vote on the, what's going on with that. So on that, I think it makes sense. Here, it is just also too, whenever I'm doing due diligence and I share some of my thoughts on it, I always get different ideas from other people too, as far as like some other way to look at it, something else to think about. And I really appreciate that, because I want to know. I think I'm overly curious, and I just want to know everything there is to know about real estate. And it's brought me to a whole bunch of different jobs. And now that it's, that you can do fractional real estate investing, I mean, I've just, you can probably tell from how often I'm just pumping out videos about this. I'm just kind of addicted to the idea. It takes my favorite asset class, which is real estate, and it makes it so that now it can be invested in a much more prudent manner, as far as the way you can, develop a portfolio that's truly diversified, that you just couldn't really do before, without like investing in a public REIT, which I've already talked numerous times over about why that's not, the strategy for me. In any case, one of the things that I hope is abundantly clear: just because I bought one of these doesn't mean that you should. You definitely want to do your own due diligence on the platform, on the property. Um, and that's it. That's all the rambling for today. Until next time, I am going to keep making mistakes so that you don't have to.